I think we should just consider this to be the next stage in what looks to be a long, drawn-out tech spat between China and the US. This has started quite some time ago, and I've got no doubt at all that this will continue for some time to come as well. It's quite clear that now that we've gone over, I guess, a hurdle in terms of trade, if you can call phase one getting over a hurdle, I guess it's a partial solution. Once we've got over that, things have become a little bit more nuanced and things have become a little bit more specific. And I guess the tech war, as it were, or the dominance in terms of the tech industry looks to be the next iteration of this ongoing spat between the US and China. So I don't think this is going to go away anytime soon, but I would argue that by now I think the markets have become quite accustomed to this. And even the ramping up of tensions on the tech side probably isn't enough by itself to derail markets. So I just think this is now just another one of these geopolitical risks that the markets have factored in and will continue to factor in going forward.
It does seem that way, certainly, given the market reaction. But it does make me wonder, the one thing we always hear investors say that does concern them if the phase one trade deal were to break down. And now that we're hearing these threats from Beijing about perhaps additional retaliation, we know they're limited when it comes to retaliating on U.S. companies. Do you think that's something they would be willing to do something that would violate the phase one trade deal? And if so, what would the markets do?
Well, the market certainly wouldn't like that. And I think that's stating the obvious, because I think we basically saw at the back end of last year a rally in markets that was very much predicated on a deal. Now, obviously, that's itself been derailed by COVID, but that's an entirely different story altogether. As far as the trade deal is concerned, I think the markets have absorbed that as being a done deal, this phase one deal, and the continuation of what it means in terms of China buying U.S. goods, et cetera, if we were to see some reversal on that, and it's a higher probability today than it was maybe a month or two ago, and obviously this is now politically sensitive running into the U.S. elections as well. If we were to see some reversal or some pushback on the phase one trade deal, that really could be one of the key risks that we would be looking at in terms of the reversal in markets. How much of a reversal that would be very much depends on how aggressive maybe China were to be in terms of pushing back on trade. I think there is this view that through COVID, trade has been one of these issues that has just simmered underneath the surface with the expectation that it's just continuing. And for as long as it continues without any pushback, everything is okay from that particular perspective. If COVID plus pushback on phase one trade deal were to become market drivers, then I think we would seriously see some reversal in terms of some of the risk taking that we've seen. So that is a clear risk, and obviously very politically sensitive now as we go into Q3 and go into the election season as well. So without really wanting to make forecasts of this, because it's virtually impossible to forecast, but it is a key risk if we see the Chinese pushing back on previously agreed deals on trade. That just clouds the outlook even further.